Hi everyone, welcome to the Frugal Rolls YouTube channel. I'm Nicole.
And I'm John.
And we're glad you're here. Thank you for spending some of your day with us. If you're not part of our community yet, click the red subscribe button. It's easy to join, it's free, and you'll never miss an episode. So today we're talking about something that we are personally passionate about, how to create a budget.
It took us far too long to learn how to make a budget and live by it. We avoided budgeting for years because we thought it would be too hard to stick to and too restricting. We have since learned just how freeing it is to live on a budget.
That's right. In this video, we're going to talk about why you should make a budget, and then we'll walk you through the 7 steps that you need to know to build one. So get out a pen and some paper or open a window on your computer to take notes and join us as we discuss budgeting for beginners. If you're a note taker like me, you may want to know what those steps are ahead of time. Here's where we're going. First, we'll discuss why you need a budget. Then, we'll show you how to calculate your income and expenses so you can figure out what is left over. We'll talk about how to slash your spending, reallocate your savings, and plan for irregular but expected expenses. Finally, we'll cover a few of the most common budgeting methods so you can pick one that you like. In all of this, we can't stress enough the need for you to make this process your own.
You know, that's right, Nicole. If you've tried budgeting before but it didn't work, it could be because you weren't making it personal. The best piece of advice I can share with you is to personalize your budget. Really make it your own. Use the framework we're giving you today to create a plan for your finances that you understand and can live by. Make sure it reflects your needs and your goals. That's really the only way to make it work for the long haul. And you want to make budgeting part of your life for the rest of your life because it will bring financial freedom and confidence in your spending decisions. You know, I remember before we lived on a budget, Nicole, Christmas was always stressful. We wanted to make it special for our friends and family, but we never budgeted for it. We would charge our gifts with no plans for how to pay them off. Moments after all the presents were unwrapped, that sinking feeling of remorse would start to settle in.
Maybe you can relate to that feeling. At the time, we resisted budgeting because we thought that budgets were restrictive. We thought we couldn't have fun if we lived on one, and that we'd have to say no to any and every frivolous expense. But one late December evening, sick of the stress and uncertainty of how we'd pay for our purchases, we decided to change. And as we did, we began to see that a budget doesn't restrict your choices. It gives you control. See, living on a budget is kind of like using Waze or Google Maps to get somewhere. Both help you reach your destination safely and in the quickest way possible. What are your financial goals? Do you want to retire someday? Do you want to take a vacation, buy a new car, save for your kids' college, or maybe buy a house? All of these are goals that a budget can help you achieve.
That's exactly right. So let's dive into our first step in budgeting for beginners, calculating your income. How much money do you earn each month? If you don't know for sure, look at your most recent pay stub. Find the amount that you were paid after taxes and write it down. If you have multiple jobs or make extra money on the side, include those amounts too. Make sure you're calculating your income after taxes and not before, so you know realistically what you have to spend each month. If you haven't been keeping track of how much money you make each month, you want to start right now. Every time you earn money, write it down. If you're watching this in the middle of the month, keep tracking your income until the next full month is passed.
While you're tracking your income and writing it down, you're ready for step number 2, which is to determine your expenses. You want to get really detailed here. Write down everything you spend money on each month. Your list should include things like rent or mortgage, utilities, internet, phone, cable or streaming services, debt payments, including credit cards and student loans, and insurance. Try to think through all of the fixed expenses that pretty much stay the same each month. Then start recording the bills that vary from month to month. This could be things like gas, groceries, giving, entertainment, and pet-related expenses. It could include medical bills or haircuts or clothing expenses. This is where making your budget personal is really important. Your list will look different than mine, and that's okay. But what should be the same is the percentage of your income that you're spending on certain things.
That's right. You might be spending more than you really should on something and not realize it. For example, You shouldn't spend more than 30% of your income on your rent or mortgage. I realize that that's harder to do in expensive cities like New York or DC or LA. If you're spending closer to 50% of your after-tax income on housing costs, you may find it very difficult to cover your other expenses and may need to look at moving or refinancing. We link to a post below that offers common categories and recommended percentages to stick to. For example, try to spend 10 to 15% of your income on groceries, the same on transportation and utilities. Make sure that you include a personal category. One of the keys to sticking to a budget is giving yourself some money each month to spend on things you enjoy, like a meal out or a coffee or going out with friends.
John, I want to stop you for a second. If you're like me and this is the first time that you've tried to track your expenses, your head might be swimming. Just start by looking at last month and recording all of your expenses. Or use an app like Tiller to help you do it. We love Tiller because it makes it so easy to track your expenses. You just connect it to your bank account and it automatically puts your expenses into a Google Sheet so you can look at them. It's free for the first 30 days and just $6 per month after that. So you can use it for a month to get a good idea of what your expenses are.
Thanks for mentioning that, Nicole. You know, the reason you want to calculate your income and expenses each month is so you can see what you have left over, which is our third step in creating a budget. When you get to this step, you might be surprised by what you see. You could be embarrassed or shocked or happy. What matters is to be honest and take a true look at your finances. When you do, change becomes possible. You may have $250 left over. You might have more, you might have less. But whatever you have, you must stick to. If it's not much, you may have a hard time paying for unexpected expenses. You might need more money left over at the end of each month. There's only two ways to get more money: make more or spend less. Our fourth step involves the latter.
If you want more money left over to put towards your financial goals and fun things, slash your spending by looking for things that you can cut. Start with non-essential things, like your cell phone, your cable bill. The average American spends $150 per month on their phone bill and $110 per month on cable. We have links below to excellent mobile phone and streaming services that can reduce those figures greatly. You could pay $25 per month with Ting for your phone and $20 for your cable by switching. Another great tool to help slash expenses is Trim. We link to it below and we love it because it analyzes your spending, finds subscriptions you don't use and cuts them, and then reaches out to your billers to negotiate lower rates.
Those are all excellent suggestions, Nicole. Now let's move on to our fifth step, reallocating your savings. As you slash your spending, you will create potentially hundreds of dollars of savings each month. You then get to put those savings towards other things. What should you put your savings toward? There are three great ideas that you can use that for: an emergency fund, paying off debt, or investing in the stock market. If you don't have one, an emergency fund is the first thing you should start. This will help you cover unexpected expenses like your car breaking down or a medical bill that you weren't counting on. Ideally, you should have at least 3 months of living expenses in your emergency fund. If you have little saved, this amount may feel overwhelming. Start with a goal of reaching $1,000. That's a great first goal and definitely achievable. Growing your savings to that amount will give you the confidence that you can reach that minimum 3-month total. Next, you want to attack your debt, especially if you have high interest credit card debt. The problem with high interest credit card debt is so much of your money is going towards your interest and not the debt. If that's your case, you may want to refinance or consolidate those loans through a company like SoFi. They help you lower your rates, which allows more money to go towards the principal and pay off the debt faster. If you have those two bases covered, then you want to start investing. I know it might feel overwhelming or out of reach, but anyone can learn how to invest. If you aren't already investing, you really should, because it's absolutely the best way to grow your wealth over time. We show you how to invest for beginners in a separate video, so check that out.
After you do that, you're ready for step 6, which is to plan for irregular expenses. You're near the end, but not quite done accounting for your expenses until you know what your irregular ones are. So, what are those things that you pay for once a year or a few times a year? What tends to surprise you whenever it comes due? For us, before we learned to live on a budget, it was our auto registration that was due once a year. We knew it was coming, but we never planned for it, never saved for it. So when the bill came due, we were scrambling to try to figure out how to pay for it along with our regular monthly expenses. Now we plan for that expense by setting aside a little money each month to pay for it when it's due. So for example, if your irregular but expected expense is a membership or other bill of some sort for $600, you can cover that by setting aside $50 each month. Open a savings account and sock away that money, or pull the money out in cash each month and put it in an envelope marked for that expense. Whether or not you decide you want to try a cash-only budget, you can make this mindset work with your budget.
Speaking of cash-only budgets, Nicole, that brings us to our 7th and last step, selecting a budgeting method. You've made it this far. Pat yourself on the back and take a deep breath. You're nearly done. Now it's time to pick the precise budget method that works for you. There are many options out there, so we're just going to share 3 of the most common ones briefly here. Those are the envelope system, the 50-30-20 rule, and the zero-based budget system. The envelope system is what Nicole just referenced. You organize your expenses into categories like utilities, groceries, holidays, gas, etc., and then make an envelope for each category. Write the amount needed for each on the envelope, and each time you get a paycheck, put the amount indicated in the envelope. This is a simple way to make sure you can pay all of your bills and don't charge anything and don't overspend. Whatever doesn't go in the envelopes is yours to spend or save for other things.
A second common budgeting method is the 50-30-20 rule. Split your costs into 3 categories: necessities, debt or savings, and lifestyle. Necessities are what you need to survive: rent, food, gas, stuff like that, and they get 50% of your income. Savings or debt payments get 30%, and everything else gets 20%. So phone and cable and entertainment and gifts would all fall into that 20% category. Now, if you're feeling overwhelmed by budgeting, this could be a good first approach for you.
And the last is the zero-based budget system. What I like about this method is that it gives you every cent of your money a purpose. First, you allocate all of your money to your expenses, savings, and any debt payments you might have. Your goal when you're done allocating is to have no money left over at the end of the month. This doesn't mean that you go on a monthly spending spree with any of your leftover funds. Let's say you go through all of your budget categories and have $50 left over. Look back over your categories and apply it to an important category or an irregular expense, or put it towards your emergency fund or invest it. It's really up to you. Instead of it just sitting in your checking account, all of your money will be working for you and towards the attainment of your specific goals. That's it. Really, that's enough for now. We hope you don't feel overwhelmed, but if you do, that's okay. It all starts with taking one step. Remember why you're doing this. It's so you can have control over your finances, so you can live free, and so you can have the kind of life you want. Budgets are empowering. Don't forget that.
And don't forget to let us know what questions you have in the comments below. Update us on how your budgeting journey is going. Thanks for watching, and if you haven't already, hit that red subscribe button so you can be notified of our new content.
And we'll see you in our next video.